Dear Chartered Accountants, working professionals and students in the domains of Indian auditing, accounting and the tax and regulatory space, welcome to podcast of FCA Deepak Rao, a practicing Chartered Accountant. Hot topic bulletin on Rbi'S revised master directions on investment portfolio of commercial banks. The Reserve Bank of India has recently come out with revised master directions on investment classification, valuation and operation of investment portfolio of commercial banks. The revised framework shall be applicable from 1st of April 2024 to all commercial banks excluding regional rural banks. These directions are based on inputs received on the discussion paper issued in 2022 and entail an overhaul in classification and valuation of investments. These directions are closely aligned with Indian accounting standards or Ind AS and signify a positive step towards transparency and global harmonization in the Indian banking sector. This standardisation ensures that commercial banks' financial statements adhere to international standards while also meeting Rbi'S prudential norms, which would ultimately contribute to a more robust and stable banking sector in India. Some of the key highlights of the revised directions are as follows. Number 1. Directions are applicable to all commercial banks excluding regional rural banks from 1st of April 2024. Number 2. Revised valuation methodologies for securities are clarified in this circular. Number 3. Determination of classification to be done at initiation of the investment and classification would be basis the SPPI test. Number 4. Investment in subsidiaries and associates would be distinct category of investment. Number 5. Classification of investment to be done in the categories of HTM, AFS and fair value through P&L. Held for trading to be a subcategory within fair value through P&L. Number 6. Reclassification of securities within categories permitted with specific accounting treatment clarified in the directions including disclosure requirement. Number 7. Non-performing investment classification to follow income recognition, asset classification and provisioning prudential norms rules as prescribed to advances. Number 8. Increased disclosure requirement including disclosure on carrying value of investments and fair value by category and fair value hierarchy of investment portfolio with breakup of level 1, 2 and 3. And number 9. Transition and repeal provisions for existing investment held as on 31st March 2023 and their classification and resultant change in carrying value clarified in the directions including treatment of provision for depreciation and investment reserve accounts. These standards are a welcome move from RBI and will enhance quality of financial reporting. Banks will have to gear up their processes and systems to ensure compliance with the new mandatory requirements of this important direction by the regulator. This podcast is sponsored by Sound of CA. We share because we care. Vande Mataram, Jai Hind.